All right, good morning, everybody. We'll get started here in just a couple minutes. Can you guys hear me okay? If you guys could let me know quickly, that would be awesome. All right, perfect. Cool. Well, listen, it's right at the top of the hour here. It's 9 o'clock Eastern time, so we're going to get started and go through a couple things. I actually want to start off. I really want to go through two things here quickly this morning. And if you're new here, first of all, welcome. This is our brand new, we call it Set the Market morning show. We purposely are making this a 15-minute show, or even potentially a little bit less, because we don't want to ramble on for no reason. We want to get through some of our most important insights and then get started into the trading day. For those of you guys that are Inner Circle members, just so you know, we're going to get started with our live Inner Circle Tuesday morning session in 20 minutes, and we're going to do a live gap trade this morning. It looks like there's one setting up. We'll look at that here in a couple of minutes as well. So let me share with you two things. First of all, I want to talk about the seasonality of Apple and a specific sort of trade idea. But before we even do that, I think it would be silly not to at least mention the fact that we have an important Fed meeting this week. Meeting starts today, and we'll get the decision tomorrow. And so what I'd like to quickly walk you through, and we're going to look at this again tomorrow, but let me share with you this here. This is something that I have been sort of going through with a whole bunch of different investors over the past, I don't know, I think, definitely yesterday and even partially on Sunday afternoon. What you can see here, and I'm going to make my picture a bit smaller. What you can see here is what I think is something that the equity investing world is not looking at a lot. And basically, to keep it short, I don't want to make this too complex, but if you look at the red line is basically the difference between what the current yield is and 2-year notes. So, whatever it is, 3.63, whatever, and where the Fed funds rate is. Now, the Fed funds rate hasn't moved because the Fed funds rate is not going to change until the Fed starts cutting rates tomorrow, most likely. But what's interesting about that differential is the red line. The red line is now at a point where it last was in 2008. And if you might recall, 2008 was what we had the great financial crisis. The time before then was, I'm going to say 2001 or so. That's basically .com bubble. And then before then was basically the late 80s, call that, late 80s, like 87-ish, that kind of period. Now, that doesn't mean the market has to fall apart here. But what the rates market, the bond market is telling us here is that there's a lot more cuts coming than I think the equity market is anticipating. And typically when the Fed cuts that many times, if it's even true, right, only time will tell, that's going to be for reasons that are not so good for the equity market. right? So if the equity market really is going to sell off, if the bond market really is going to have rates crash like that, then that will be because the Fed has to cut rates, not because they want to, right? So again, there's a lot to unpack here, and I realize this doesn't make, the kind of the mainstream CNBC kind of thing, but on the institutional level, I spoke to several hedge funds about this on Sunday on our Sunday afternoon call, and then with a pension fund and a few sort of family office outfits yesterday. This is one of the very most talked about things, right? And yes, this is going to matter for equities at some point. I just don't know. We have a weird cycle right now, so I just want to quickly throw that out there so you guys are aware. Now, 5 minutes in, we've got 10 more minutes. Let's look through Apple seasonality. This, I think, is important because, this is also important. The other thing, obviously, is more important even, but this is, if you're just looking at stocks, this is also important. So what I'm doing here is I'm giving you a statistic on Apple that historically has worked well. I've almost every year for the past few years, and I say almost because I just can't recall, but I'm pretty sure it was probably every year for the past number of years, have basically put on a specific trade on Apple in right about now, basically after they released the new iPhone. That's typically when this stock has seen a little bit of weakness. And so what's also interesting is that this kind of coincides with the typical September, October seasonality of weakness for S&P stocks, right? But I think what we're seeing now is this to play out once again. And so before we look at this chart a bit more, let me walk you through the seasonality chart here. This compares the seasonality. This is the average seasonality in any given year, right? And I think this was 2022. So you just have like a 1 year comparison. The green line is a 1 year comparison, like a specific year, I should say, not a 1 year look back. And then the black line is basically, a number of years. I think it goes back about 10 years or so. And you can see that seasonal weakness kicking in basically now, or even like a week ago, for about a month. Notice that I'm not saying the stock's going to fall apart, and the trade the thought I'm going to give you here from a trading perspective is reflective of that. But it works well within the context of putting on a trade in Apple from an income perspective, and if one is long the stock, one could put this on as a hedge, for example, right? I can't give you investment advice here, of course, but it's just through the lens of education. So what is it? Well, let's look at the chart here of Apple in a bit more detail, just looking at the past number of years. So again, what we're looking at is typically once the new iPhone gets announced, there's a bit of an excitement into that event. Not every single year. In 2022, we didn't have that too much, but 2022 was a broader equity market down year. But we had it for most of the years of the past. Wasn't always exactly to the day, but some sort of an excitement, for the new iPhone announcement. And what then typically tends to happen is that once the iPhone has been announced, we tend to see some consolidation, right? It looks like that. Again, how deep that is depends on the year, and it's not about making a bearish call on Apple in any meaningful way. It's just saying, hey, the stock is probably going to mean revert or at least pause. And so when we look at these kind of pausing methods at trades, I typically don't want to be directionally exposed as much as I want to put on something like an options credit spread. And so I was looking at this earlier. The Apple is set to report its next batch of earnings in the October timeframe. So I think it says October 24th here. We'll see. Have to check the website if that's actually true, but that seems about right. And this would be a trade between now and, let's say, the next 3 weeks at most, or within that sort of time horizon. And so it's not about saying that the stock's going to fall apart as much as it's saying that the stock's probably capped on the upside. And for those of you guys that do options credit spreads with us, whether it's on the Credit Spread Authority side or with the Vertical X Pro, you're familiar with that concept. So we're basically saying that, you know what, the stock may be a bit capped. How could we take advantage of that? And so one way of doing that is with what we like to do is something called an options credit spread. Again, if you're using the Vertical X Pro or you're a Credit Spread Authority member, you are obviously well aware of that. And so what I am looking at here right now is using like November options. We don't use short-dated options like options inside of 55 days because that defeats the purpose and it can get very, very dangerous. But typically what we would do is we would sell an out-of-the-money call spread and keep it on for a couple of weeks or so. So right now, the November options, the November 15th options, let me quickly do some math here to give you a basic idea of what this could kind of look like. So maybe we could do like a 240, 245. Let me see. Yeah, I mean, that's actually maybe a touch too high, 240, 235. That's probably better. And I'll write this out for you guys. Oops. 235. I'm just looking at a different screen here. 1 second. Yeah, that's probably closer to it. So what one could do here is sell like a 235. Again, remember, this is not advice here, just simply educational. What I could do is I could sell a 235 call. These are November monthly options. We typically tend to use them. So that would be selling a call around this level and then buying another call against that at 240, right? And so currently, if I were to do that, it's called a bear call spread. I would get about 90 plus minus cents on that. So that's $90 per contract. So if the stock for the next 2 or 3 weeks just goes, either a little bit lower or it goes a little bit sideways, or even if it goes up a little bit, right? Not too much, can't do this. But if it goes, kind of like this, we should be able to make money from that. So again, the seasonality pattern here, I think, plays in quite nicely with this trade idea. So it's what I personally wouldn't necessarily do is be directionally short. So this is not, to me, an idea to be literally shorting the stock. It's more about saying, hey, there's seasonal weakness, but the weakness isn't like terrible. Right? It's not saying the stock's falling off a cliff. It's just saying that the stock is likely going to consolidate here for the time being, right? What I'm using here is for this kind of an idea, I always use monthly options expirations, Nicholas. Personally, I always use monthly options expirations, so I don't use weekly options. I use the regular monthly. So for the month of November, those are I believe the 15th of November. Just check. Yeah, that's the 15th of November, right? That's what we typically would use for something like that. So is this helpful? Does this kind of make sense for just a little idea here? Again, the seasonality pattern for an Apple is, and I always caution about seasonality in terms of using that as a standalone analysis or even as the only analysis, which unfortunately some people do. If we can get our head around why this is happening with Apple, it becomes a lot more trustworthy. So like in the case of Apple, people get excited about the iPhone announcement and then it just kind of gets priced in, So that's typically why this seasonality tends to work with Apple. So that's pretty much what I want to share with you today. Again, for those of you guys that are equity-only investors, I would plead with you literally to understand this chart here. Take a picture of this chart, go understand it, Google it, ChatGPT it, internalize it, tattoo it, whatever you need to do. It is very important because this will come back home to roost at some point. The bond market typically signals the proper signals. Whether this is an immediate equity market demise or not, we'll see. I don't think it is, but it's probably a warning shot. At some point, we'll find out. But please understand that there's something weird about the bond market. Take it from a bond trader. This is not normal. As you can see, these differences between 2 years and Fed funds is not normal to have to be this wide. So anyway, if you are an Inner Circle member, we are going to go live into the market here in just a couple of minutes. So I'll see you guys over there. I'm looking at the gap in the NASDAQ 100. I'll quickly share this with you. We're looking at some gap opportunities here this morning. I think we're going to be able to have a nice gap trade. We're going to do it live in the Inner Circle members chat. If you are a member, we'll see you over there. And I will leave you with this chart here of Apple for those of you guys that haven't yet noted this trade. Hopefully this is helpful. Again, give us some feedback. We'd love some feedback on the things that we're doing here. If you guys are enjoying this show and morning show, again, nice and brief, 10, 15 minutes. That's all we want to do. We don't want to be here in the app, for an hour. It bores everyone, including myself. So hopefully you guys are enjoying this. If not, please give us some feedback so we can make it better. We're going to constantly make this better. We're going to start having guests on as well going forward here. So thanks for joining. And again, if you're an Inner Circle member, we'll do a live gap trade here in just a few minutes in the member webinar over there. See you guys there, and thanks for being here this morning. Hit the like button. Yes, exactly. If you could, that would do us a great favor. Exactly. I should have said that before. Hit the like button. Appreciate it. If you're an Inner Circle member, yeah, I'm sure you would have received an email by now. Otherwise, you can just email the support team and they will send it to you. Thank you, guys. We'll see you soon.